Hey everyone, welcome to today's Explainer. We've got a really fascinating one for you today because we are going to decode the completely contrasting realities happening right now in the Indian financial and tech markets. We're going to look at why some sectors are terrified of AI, and more importantly, how one specific financial giant is taking what many see as a threat and using it to totally redefine their operational efficiency. Here is a quick look at our roadmap for today. First, we'll cover the shifting Indian market landscape. Then, we'll look at AI as a threat to the IT sector. After that, we'll see how Bajaj Finance embraces AI, dive into their financial efficiency payoff, and wrap up with the stock impact and outlook. All right, Section 1, the shifting Indian market landscape, including the winners, the losers, and the mega deals. Let's start by looking at the broader economic environment, where massive amounts of capital are colliding with strict compliance. Just to put the sheer scale of capital currently in motion into perspective, think about the Swiggy IPO. We're talking an issue size of up to 11,327 crore rupees, priced at 390 rupees per share. That massive figure is a huge signal, right? It shows there is still a very strong ongoing investor appetite out there for scale. Basically, there's a lot of money moving around, actively looking for the right growth opportunities. But let's be real, growth requires immense discipline. And the current market divide illustrates this perfectly. On one hand, you've got traditional, disciplined players like Bandhan Bank. They just achieved a massive 68% surge in profit after tax, hitting 534 crore rupees, driven purely by disciplined execution and a diversified model. On the flip side, you have tech-heavy players like Paytm. Sure, they're narrowing their losses, but their revenue growth is totally disconnected from net profitability. They're still bogged down by structural cost issues and regulatory hurdles. True profitability is still elusive for them, which proves that execution is literally everything right now. Moving right along to Section 2, AI's threat to the IT sector. Because right into the middle of this shifting market drops a massive, disruptive force. It is truly fascinating to see how AI is being perceived by India's legacy IT sector. Mitul Kalawadia over at ICICI Prudential AMC actually hit the nail on the head. He pointed out that AI isn't just a temporary phenomenon, it's a fundamental structural change. And because of that, traditional valuation multiple expansions could actually be compressed. So for the IT sector, AI is definitely not just a new tool, it's a massive recalibration of their entire growth prospect. So why are they so worried? Well, the crucial point is that generative AI is directly attacking the traditional labor arbitrage model that the IT sector relies on. It's automating coding, customer supports, you name it. This creates rising AI deflation risks, meaning clients just expect to pay less because AI is doing the work cheaper. That tightens pricing power and slows revenue growth. And on top of that, hawkish Fed rate hikes are forcing clients to shift their discretionary spending away from traditional IT, pushing it toward cloud infrastructure and cybersecurity instead. The old model is just under severe pressure. Okay, Section 3, Bajaj Finance embraces AI. This is where it gets really good, because what happens when a major NBFC decides not to fight the disruption but fully integrate it? Get a load of this number, 33 billion rupees. That represents the personal loan disbursements generated entirely by Bajaj Finance's AI voice bots in FY26. Let that sink in for a second. We aren't talking about small pilot programs here. These AI voice bots accounted for roughly 8% of the company's total personal loan disbursements. They've essentially taken a massive technological advancement and turned it into a fully functioning high-volume revenue engine. And it's not just on the sales side either. Think about their customer service email processing. Autonomous AI agents are now successfully handling nearly a third, 32% to be exact, of all customer service emails, and they are doing this without any human intervention whatsoever. That is a profound, game-changing shift in their operational capability. Which brings us to Section 4, the financial efficiency payoff. We see the tech working in sales and customer service, but how does this actually translate to the financial bottom line? Well, it translates beautifully, actually. In their Q1 FY26 results, this modernization directly led to a 20% year-over-year surge in consolidated profit after tax, hitting an all-time record of 4,699 crore rupees. When you automate massive chunks of your workflow like they are doing, your operating leverage improves dramatically, and that efficiency falls straight to the profit line. And the crazy part is, they're treating this as just the beginning. Their FY26 to FY30 long-range strategy lays out a really aggressive path. They plan to expand this AI-led automation even further across CRM and disbursements. Step 2 is boosting overall workforce productivity by another 12 to 15%. And step 3, management is guiding for an additional 25 to 40 basis points reduction in operating expenses by FY27. They are systematically engineering a much leaner and vastly more profitable machine. Finally, Section 5, Stock Impact and Outlook. So we've got the macro context, the tech pivot, and the financial results. Why does this matter to the market, and what's the big takeaway for you as an investor? It matters because Bajaj isn't just blindly chasing growth at all costs. They're actively de-risking. While AI drives efficiency, they're getting smarter about their portfolio. The share of secured loans at the consolidated level has gone from 56% in FY22 up to 61% in FY25 and now sits at 62% for FY26. At the exact same time, they deliberately slowed unsecured personal loan growth to 21% amid intense competition. They're basically using their AI efficiency buffer to safely pivot toward higher quality, secured assets. And the market is absolutely taking notice of this. Analysts at JM Financial raised their target price to 1,220 rupees, specifically citing these AI-led efficiency gains, and upgraded their valuation multiple to 4.8x FY28 book value. On top of this, the company successfully completed a highly anticipated stock subdivision in June 2025, dropping the face value from 2 rupees to 1, and immediately followed that up with a 4-for-1 bonus equity issue. They're rewarding shareholders while building an incredibly resilient tech-forward business. So as we wrap up this explainer, we're left looking at a pretty stark contrast. You've got structural fears gripping the legacy IT sector, where AI is seen as a deflationary threat to margins, and then you have Bajaj Finance, turning that exact same technology into 33 billion rupees in automated loans and a record profit surge. It really leaves us with one critical question to ponder for the future of the economy. Is AI your company's biggest threat or its greatest superpower? Thanks so much for joining me for today's explainer, and I'll see you in the next one.